Hey everyone, welcome to Smart Investing. So today's video is just going to be one bank stock. We're going to go over the fundamentals, technicals, and quants, and then we're going to see if this is a good company overall or not. So for today's stock, we have FFBC. This is obviously the continuation of the banking sector. So with that said, let's just begin and jump right to it. We're going to jump into the first page. So what we have here is a stock price of 24.23. Again, markets are closed. It is 5:08 p.m. Trying to draw, it's not letting me. It's 5:08 right there. I can't draw the whole thing, so I apologize for that. Can't circle that up there. So anyways, it's 5:09. Markets are closed, and we're just reviewing this company. So by the looks of it, again, a lot of these stocks for the banks, they're not really growth stocks. They're not really income stocks. Uh, you know, they're only there. Um, they're really good at bear markets, and the reason I say that is because when things are getting worse, interest rates go up, and then they actually make more money that way when they lend. So we just want to see overall how this stock is doing. So again, with the first page, it looks okay. Nothing really pops out at me. I'm not seeing anything that's like wow. I don't see any factors that'll say like this stock has to be on your watch list. Um so far I don't see that based on the numbers that I'm seeing. So I mean, we have positive earnings, which I would hope, a bank would have positive earnings. 52-week high and low. It hasn't even reached the $10 limit usually for bank stocks. Usually that's what I see. Market cap ain't too bad, more than many that I've gone over this past year. PE slightly undervalued, and then dividend is not even $1. Dividend yield is not that impressive, I think. At 3.8 is pretty regular. Share price $24. It's pretty affordable, but it's just not for me personally. Uh, and even for the average investor, it's just doesn't look good. It needs a lot of work. It's not bad, but it's not, you know, that good either. If even if you invested this in 5 years ago, you would have just been flat on your money. Yes, you would have been collecting dividends, but it's not even worth it if you got in at the wrong time. You would have to gotten in typically, like most stocks, when 2020 was a bad year, and we have to wait till there's another downtrend for this to pretty much get some capital appreciation. So for the technicals, it looks pretty flat to me. I mean, there's nothing eye popping. It's nothing very interesting to look at. We're gonna go into the analysis for the quants and see if there's any strategy to use for this stock to pretty much use this as an advantage. Is this stock even good for anything? So overall rating for the quants was a 3 out of a 5. So uh highest rating was momentum. So if we're looking at and focusing on momentum, I would like to see some volume close to or about the same as the average volume. It would have been nice to see that this one markets were open, but since markets are closed, doesn't look pretty interesting. You know, I mean, it doesn't look that appealing. Then we have the actual company, and we could take a further look at the fundamentals. So we have here the earning estimates and the earnings results. So it looks like in Q4 2021, looks like they beat it. They missed in Q1. They hit the target, then they missed again. So it looks like about half the time they're beating estimates and they're doing okay. Um, Nothing too crazy. They haven't missed by wide margins. Everything has just been narrow, which is pretty good. And then from 2022, as we can see here, they're predicting just, you know, higher results, which is very, very understandable because, like I said earlier, banks do better when markets are trending down because those rates for interest go up. So it's gonna cost. It's not gonna cost them more to do business, but they earn more for their business, and it gets harder for the consumer. And it's just a matter of time of uh, who pays up, when they pay up, if they pay up. Just so many unanswered questions that can go along with bank stocks. And also, there's so many banks to choose from, which kind of gives the impression why would they choose that bank anyway? So, it's just really hard to choose um, which are good banks, which is why, it's just, you just have to be very, very selective. And then even when I saw the large banks, uh, the top five favorite like JP Morgan and Citi and all these other banks, and honestly, their numbers are pretty bad. But yet, it's just the fact that their market cap are so huge that they're too big to fail. So that's just pretty much it. And then obviously they do investment banking. They don't say it, even though they're supposedly in regular banking, but they do have some investments, which are not, I guess, is not publicized, or it's not as popular as other investments, pretty much. But they do have smaller investments. So income statement, it looks like their income, it has been better the last 4 years, which is good. So they only had that increase from 2017 to 2018, and then the last 4 years just look flat, and that was pretty much it. And then for the balance sheet, 86% debt, better than most banks, and considering the market cap overall. But overall debt, I've seen it better. This company seems better than most banks that I've seen. Now, here we go with the key factor coming down to the cash flow. Is it going to be positive or negative? And this is what's really going to determine it. Even though for the quant rating it said eight point whatever, and the best strategy for that was to use the volume and more of a day trading strategy to see if you can gain, I don't know, a few cents on the dollar with this stock. I don't see it. I think there's better selections, but who knows? That's what it was rated. Um, Maybe it sees some reason that I don't. So looking at the cash flow, they break even. It's nothing crazy. If I want to do the exact numbers, so we have about 500. They're slightly negative, actually. They're slightly negative. They're only negative 2 million, but can they make up for it with the net income? And yes, they can. They can definitely make up for the net income. So 200 million basically in profit, And I'm sure that goes towards the dividend, or they can use some of that for cash flow. But again, typically you want to see cash flow positive instead of digging from the net income. So with that said, we have here we have the dividends. Looking at that, look pretty flat. Everything is 23 cents. Not many raises. So for this stock, I'm actually gonna say no. As you can see by the numbers, everything, it doesn't look appealing. I'm not crazy about it. I bet there's other stocks that are better than this. So I'm gonna say no to FFBC. So if you haven't seen the last video, CAC was also a no, and that was pretty much it. Stay tuned for the rest of the stocks. I'm gonna go over them, do some short videos, but again, this is my analysis and evaluation for this stock. So I'll see you guys soon in the next one.